Is the market turning bearish? Nifty broke below 25,000 today. Axis Bank crashed 5%. HDFC tanked 30 points and option premiums went wild. Let's decode today's full market story. On the daily chart, Nifty opened flat at 25,108, almost flat from the previous day's close. By the end of the day, it closed at 24,968, down 143 points. The critical point is it broke the psychological support of 25,000. You can clearly see that the long red candle on the daily chart pierced through the previous consolidation zone and ended below the 20 and 50 EMA. This isn't just a down day. This could be a shift in trend. The question is, have the bulls lost control or is this just a shakeout? In the 5-minute chart, Nifty shot up to 25,144 in the first 5 minutes itself. A fake out rally that probably trapped early buyers. But right after that, the sell-off began. By 10 a.m., Nifty had already fallen nearly 200 points, breaking the crucial 25,000 support. For the rest of the day, it was consolidating in a narrow range just below 25,000 and finally closing at 24,968. This shows clear intraday weakness, and when a psychological level like 25,000 becomes resistance, it's a warning. Let's analyze the 25,100 PE. Even though today is not expiry, these options give insight into how option premiums behave. The PE opened at 105 and within 2 hours, it skyrocketed to 220, a 115 point jump. The important point to note here is Nifty was at the same level at 11 a.m. and again at 3:30 p.m. But the 25,100 PE premium fell from 220 to 175. That's a 50 point decay with no index movement. This is a textbook example of theta decay and how consolidation kills option premiums. Buyers who timed their entry and exit well doubled their money. But if you are greedy and held on till the end, you lost a chunk of your gains. Lesson: the important lesson is you should know when to book profits. Market gives opportunity but not for long. Now coming to the 25,100 CE, again for the 24th July expiry, it opened at 162 but immediately started falling. By the end of the first hour, it crashed to 75, losing more than 50% in just an hour. This was a perfect day for option sellers, especially call writers. CE buyers were trapped in the morning spike and most never got a chance to recover. If they didn't exit early, they suffered heavy losses. This shows how dangerous it can be to chase momentum without confirmation. Today's fall wasn't random. Two heavyweights were responsible. Axis Bank crashed 5% after its earnings disappointed the street, and the index heavyweight HDFC Bank lost 30 points. These two alone were enough to drag the index below 25,000. So what does this all mean? The break of 25,000 is a major technical signal. If Nifty can't reclaim it early next week, we might be looking at a slide toward 24,800 to 24,600 levels. For traders, this is a time to be cautious and nimble. Avoid emotional trades, especially in options. And most important, respect your stop loss because on days like these, the market doesn't forgive. That's a wrap up for today's market episode. If you found this breakdown useful, hit like, drop a comment and subscribe for more sharp and real market insights. Thank you.